Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Welcome to this special deep dive edition of Modern Investing Techniques. Today we explore the SpaceX initial public offering process and what it means for retail investors. I'm not a licensed financial advisor, and this isn't financial advice. Nothing here is a recommendation to buy or sell any security. Always do your own research before putting real money to work. SpaceX filed its S-1 on May 20th, targeting a June 12th Nasdaq listing at roughly $1.8 trillion valuation. This episode gives retail investors a concrete plan across 3 time horizons. On May 20th, 2026, Space Exploration Technologies Corp filed its public S-1 registration statement with the SEC. That filing converted months of draft stage speculation into a concrete timeline. The timeline points to pricing around June 11th and first trading as early as June 12th under the ticker SPCX. By the end of this episode, listeners will know exactly what the filing confirms about valuation targets, underwriters, and Starlink's contribution to revenue. They will also leave with a practical 3-horizon framework for deciding whether and how to participate once the stock begins trading. SpaceX filed a confidential draft registration around April 1st, 2026. The company then converted it to a public S-1 on May 20th under registration number 333. That step made the prospectus available on EDGAR. Reporting from Reuters and CNBC indicates the company is aiming for a listing on Nasdaq as early as June 12th. The roadshow is expected to begin around June 4th, and pricing is targeted for June 11th. The valuation range discussed in recent coverage has settled around $1.75 to $2 trillion. Bloomberg noted on May 29th that the target had been adjusted to at least $1.8 trillion. The deal is structured to include Starlink connectivity operations, launch and space services, and XAI. Goldman Sachs is serving as lead left bookrunner alongside Morgan Stanley, Bank of America, Citigroup, and JP Morgan. Starlink generated $11.4 billion in revenue in 2025. That amount represented 61% of the company's $18.7 billion total. Starlink is also the only segment showing operating profit. The overall business posted a net loss in Q1 2026. A potential retail allocation near 30% of the float has been mentioned in secondary commentary. That allocation remains unconfirmed in primary filings or major reporting. The 2026 IPO calendar features several large technology and AI-related offerings. This creates a market backdrop of elevated investor interest in growth names, even as interest rate and risk sentiment remain mixed. The S-1 shows that Elon Musk holds approximately 42% of equity, but 85% of voting power. That structure preserves control through a dual-class arrangement. The arrangement will matter for governance questions after listing. Starlink is positioned as the cash-generative core. It has more than 10 million subscribers and continued growth into Q1 2026. Launch operations and XAI continue to consume capital. Underwriters typically allocate the majority of shares to institutional clients in the initial offering. Most retail investors will therefore obtain shares only after trading begins, unless their broker offers a directed share program. Reading the prospectus requires focus on revenue concentration. It also requires attention to the path from operating income to free cash flow. Investors should examine the use of proceeds and any government contract exposure that could affect margins. Canadian investors must weigh TFSA, RRSP, or FHSA eligibility against the fact that the shares will trade in US dollars. That currency exposure can be hedged or left unhedged, depending on account type. Valuation discipline starts with comparing the targeted multiple to other high-growth technology names already public. The $1.8 trillion figure implies aggressive assumptions about subscriber growth and launch economics. Platforms such as Interactive Brokers, Questrade, Wealthsimple, and Robinhood will likely offer post-listing access. Conditional offer to buy windows before pricing remain broker-specific and are not guaranteed. The filing does not yet detail exact retail allocation mechanics. Investors should monitor subsequent amendments and broker announcements rather than assume early access. A disciplined short-term approach treats the opening days as the highest risk window. First-day pops are common but frequently retrace. Wide bid-ask spreads plus potential volatility around the open make chasing the initial print expensive for anyone without a preset role. Investors can decide in advance whether they will participate at all on day one or wait for volume to normalize. That decision removes emotion from the process. In the medium term, the 180-day lockup expiry creates a predictable supply event. Early investors and insiders become free to sell at that point. Waiting for that window or dollar cost averaging afterward has historically reduced entry prices for comparable names. The first two earnings reports as a public company will supply the initial evidence on whether Starlink margins and subscriber metrics translate cleanly into GAAP results. Over the long term, the thesis rests on recurring satellite broadband revenue. It also rests on Starship-driven launch cost reductions and the broader total addressable market cited in the filing. Those factors must be balanced against key person risk, ongoing capital intensity, and competition in both connectivity and launch markets. Canadians should consider whether a taxable account or a registered plan better accommodates the currency exposure and single stock volatility limits they are willing to accept. Position sizing should reflect the difference between a diversified ETF holding and a concentrated growth name. Investors need clear criteria for what subscriber or margin data would confirm or break the investment case over multiple years. The same horizon framework can be reused for any future large-cap IPO. Define the entry rule for each period before the stock begins trading. Then execute only according to those pre-written rules. Historical data on large IPOs shows that many names experience first-day gains followed by underperformance over the subsequent 1 to 3 years. That underperformance often occurs once lockup supply arrives and fundamentals are tested in public reporting. The current research notes that some analysts view the valuation as aggressive relative to a sum of parts breakdown. Others highlight the optionality embedded in Starship economics and future businesses. Execution risk remains material because launch cadence, satellite deployment, and regulatory approvals for spectrum and orbital slots must continue at scale. Musk's concentrated voting control reduces the ability of public shareholders to influence strategy. That control can be viewed as either a strength or a governance concern depending on execution outcomes. Competition in satellite broadband from established and new entrants could pressure margins even if Starlink grows. The capital demands of both the launch and AI segments add further pressure. The base rate that IPOs tend to lag broad indices in the first few years after listing is well documented across multiple market cycles. That base rate should inform any position size decision. Predefine separate entry and sizing rules for the first trading week, the lockup expiry window, and the multi-year hold period, rather than reacting to price action. Focus first on the quality and concentration of revenue and the path to sustainable free cash flow in the S-1 before considering valuation multiples. Treat any single name growth stock as a satellite position whose size is caped by personal volatility tolerance and overall portfolio construction rules. Watch for amendments to the S-1 and broker announcements on retail access in the coming weeks. Then compare those details against the 3-horizon framework before taking any action. The show returns to its regular daily markets coverage next episode. Thanks for listening to Modern Investing Techniques. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you